Hi, Richard Kosoff with Guaranteed Rate, a national lender. I hope to give you the information through this series that gives you the information you need to make an informed decision about buying a home. Now, I know what you're thinking. Rates went up from 3% to 7%. Is this a good time to buy a house? Well, I have to tell you something. When rates go up, sure, payments go up as well, but prices come down. If you look at sites like Realtor.com or Zillow, you'll see price reductions happening now. So I say this is a great time to get out there, look at houses, and if you see something you like, it's okay. Write an offer. Maybe the seller will counter. Maybe they'll agree to your price. Maybe if the prices are lower, even though rates went up, that payment is still going to be reasonable. Let me just say I've been doing this for a long time. In fact, I even wrote a book called What Your Realtor, Loan Officer, and Appraiser Forgot to Tell You, a guide for first-time homebuyers. I wrote it in 2005, so of course it's a little bit dated, but there is some good information here and you can check it out. Things haven't changed that much. But before you buy a house, there are a couple of pieces you should get squared away. Everyone should go to annualcreditreport.com. That's a great site. It's free. They pull from Equifax, Experian, and TransUnion, and you can see your credit score, which happens to be the same credit score I'll see. If there's any problems that need to be corrected, this is the time to make the phone calls to the creditors and get that credit report squared away. Of course, you have to have income. Banks are going to look at the income as well as the appraisal of the property and down payment requirements. Used to be down payment was like 20% for a house. Now you can buy something with as little as 3 or 3.5% down. For those of you that are interested in Guaranteed Rate's a mortgage banker. If you look at the White Sox, they're all over the White Sox Stadium, and they are a national lender. The difference between a mortgage banker and, say, a bank, for instance, which I've worked for both, is that the mortgage banker has a little more flexibility. While banks do the very cut and dry W-2s, pay stubs, tax returns, companies like Guaranteed Rate, they're a little more aggressive. So there's an opportunity there to be a little bit more flexible when it comes to lending parameters. That's really it for now. I just wanted to introduce myself. I'll do another series on the pre-approval process coming up next. Check it out, and hopefully this will be the beginning of something exciting. Richard Kosoff with Guaranteed Rate. Thank you.